Good morning, dear friends. Today is Wednesday, September 3rd, 2025, and it's coming up to 10:30 a.m. in Switzerland, here in Europe. So yesterday, US stock markets ended in negative territory. The S&P 500 closed slightly down, a bit more than 0.5% at 6460.26, and the Nasdaq Composite finished down 1.15% at 21,455. And the Dow Jones went down by just over 0.5% to 45,295. In Europe, stocks also fell, just like the USA. So the Euro Stoxx 600 index, which is the 600 largest stocks in Europe, fell 1.5%. That's quite a lot, to 543. The FTSE 100 in London unusually gained 0.1%, but that was probably on the back of the falling pound, meaning that stocks in London seemed cheaper, accounting for the relatively large fall in the pound, which we'll come to. And the German DAX index rose 0.5%. And this morning in Asia, the Nikkei was down 200. The Nikkei 225 was down 1.24%, and the Hang Seng index was down 0.46% at 25379. So what we're seeing across the board are, at least last night and this morning, falling stock exchange indices. So let's just have a quick look at how the various markets are doing. First of all, we're looking here at the US stocks, and you can see that there's a sea of red here. Healthcare is doing all right, but broadly speaking, a lot of red. And if I look down here in the bottom right-hand corner, I can see that gold mining shares were doing very well. So let's just have a look at the gold price and see what was going on with gold yesterday. So I'll just come back to the trading view. We'll have a look at that. Here, let's bring up gold in dollars. We want it. Okay, so gold had a strong day yesterday. It rose at one point on the futures to 3,602. And you can see spot gold is trading at about 3,540 at the moment. It's 10:30 in the morning, which is up from, I can see it's up from 3,480. So it's up about $60 odd since yesterday. And you can see from 2 days ago over here, 3410 to 3540, it's up $100 over 2 days. Likewise, silver is doing quite well. Also, first of all, gold is an all-time record. This is an all-time record, 3540 on the spot market. And silver, we'll look at that. That's sort of a multi-year high at $40.86. And if I look at it over 5 years, you can see it's effectively over the last 5 years, it's an all-time high. But if I go to the maximum you can see it did peak at around just under $50, around $50 back in 2011 or thereabouts. So 2011, yeah. So it's got some way to hit the all-time peak, and I think most people think it will go through the all-time peak pretty quickly now. We'll just go back to the last 5 days, where you can see the silver price rose rapidly over the last 5 days from about $38 something to $40. So $40 was a bit of a level which people were watching very closely, and now it's through $40. I think the view is that it's going to go much higher. Also, just to mention that platinum and palladium were up on the back of silver. So why is gold going up? Why is silver going up? Well, gold is going up. Obviously, we've got central bank buying. We've got the expectations of a Federal Reserve rate cut. That's imminent. Let's just have a look at the probability of a rate cut here. And we go here. And you can see that on the CME FedWatch, we've got an 89.7 probability of a 0.25% cut and a 10% probability that they're not going to do anything. That's the present expectation according to the markets. Bond markets, they've been under heavy pressure. Long yields are climbing worldwide. So we're talking about the 30-year yields here. They're around the world, long 30-year yields are at multi-year highs. Japan's 30 yield is 3.28. UK's 30 is at just under 5.7%. German and French long yields are also very high. The only one which isn't really at an all-time high but is still heading in the wrong direction is the USA. So let's just have a look at those yields. I'll bring them up here. We'll go to the section bond yields, and we'll start with the German. There we go. There's the 30-year bond yield. I'll make that a bit longer to look at how it's going over the last year to date. So here's the German 30-year government bond yield. As you can see, it's 3.40. The French is a lot higher than the German. That's the 10-year. The French 10-year is higher than the German 30-year. But if we go to the French 30-year, you can see that's at 4.49 compared with the German 3.4. So the French 30-year 4.49 is rising. Now, both the German and the French, they're both in the Eurozone, so you'd expect them to have the same yield. The fact that the French has a 1% higher yield than the German yield kind of implies that there's a lot of worry about the French economy and maybe the ability of the French government to repay in 30 years' time. Or put it another way, maybe that's telling us that there's a fear that the Eurozone won't exist in 30 years' time. British yields are in trouble. If we look here, the UK 30-year yield is up at 5.71, the highest in donkey's years. I'm going back here, but we can see the gilt crisis here was in 2020. When was that? That's 2023, about 2 years ago. So the gilt crisis was 2 years ago. The yields are much higher than 2 years ago, at least on the 30-year. And the last time we've seen yields this high was 1996, nearly 30 years ago. So that's pretty high for the UK government. And we can go back just to the 10-year here, and we can see long-term how the 10 years looking. It's the highest yield in 17 years, something like that. Italy 30-year yields, also if we look at the short term, it seems to be heading higher. So 4.65% on the Italian. And Japan is the big worry really here, because Japan have got a massive debt to GDP ratio. And the problem with that is that they've got a lot of debt maturing at much higher rates than they had over the last decade. So if we look here at the long-term rates, we had the 10-year bonds previously were trading at 0% yield, zero yield. So they're now at 1.64, which is many multiples of that. Now, the problem is they're going to have these 10-year bonds maturing all the time, and they're going to have to renew those bonds at a much higher rate. Now, it wasn't so much of a problem having a huge debt to GDP ratio when your interest rate on 10-year bonds was zero, because actually it was costing you nothing to borrow. But now it's costing them a lot more at 1.64%. And if we look at the 30-year yield, which was also pretty close to zero, I'll just go to all-time here. So we had let's do 5 years. So we had a yield of 0.6, and now the 30-year yield is 3.29%. So again, another problem for the Japanese. As bonds mature, they'll have to roll them over at a much higher rate. So that's a bit of a worry for the markets. Let's just have a look at the tech stocks and see how the tech stocks are doing here today. So we'll go over here and look at the map of stocks. I'll just bring that up. So as you can see, a sea of red yesterday. How are the futures looking? Well, going here, much better. So if you look at the S&P 500 up 28 points, the NASDAQ 100 futures, they're up 146 points. Well, why is that? Well, we've had some good news between Apple and Google. They've kind of reached some sort of agreement between them about whether Google will have to pay Apple for allowing it to be the default browser on Apple devices, and also Google has been ordered to hive off the Chrome browser. And the markets see these bits of news as good news. Let's just have a look at the stocks themselves. I'll go to stocks, and I'll have a look at Apple first to see how that's. We're going to look at what we're going to do. We're going to see how Apple is trading overnight, because we've obviously had this good news overnight. Let me go to that. There we are. Now you see this leap in the Apple price here, and also if we look at Google, or Alphabet as it's known, also this leap in the price overnight. So Alphabet closed at 211 in the late trading or the early session. It's now trading at 223, up, looks like it's up about $12 since yesterday's close. And Apple closed at 229. It's now trading at 236 in the pre-market. Other stocks doing not so well were Amazon. Here's Amazon, pretty much the same as the close was, 225, now closed at 225, still 225. Nvidia closed at 170, trading at 170 in the pre-market, and Tesla a little bit higher, closed at 329, now trading at 333. What else have we got going on? Commodities, well, obviously gold, we see that at the record level, silver at record levels, or near enough. In the foreign exchange markets, we've got I said we're going to look at the pound. Let's have a look at the pound, see how that's doing. Currencies, pound is down. Bond yields, commodities, currencies. Oh, don't have that. Let's look at the pound over here. Oops. So here we are, the British pound. I'll bring up the chart. You can see on that chart just there, here we are. British pound is just falling off the cliff at the edge here. So if we go back to the daily chart, here we see at 8 p.m. last night, 4 a.m. this morning, and yeah, it's come down a bit here. Let me make that a bit longer, 1 hour chart. There, oh, that's more telling. You see the large drop on the right hand side of the screen here, where the pound has literally dropped from 135 to 133.80. It's quite a big move downwards. It's not alone in moving downwards yesterday. The Japanese yen moved downwards here as well, as you can see there on the right hand side of the chart, and also the euro hasn't been doing too well in the last day or two either. It's bouncing back a bit this morning at 116. So what news have we got coming up? So in the next day or so, we've got the non-farm payrolls report, which is due out on Friday. The markets I think this is the final bit of important news, apart from the inflation news, which will come up before the next Federal Reserve meeting, and it'll give the market an even clearer indication as to which way the interest rates might change at the FOMC meeting in mid-September. We've also got the jobs report, so that's the same thing coming out on Friday, the non-farm payrolls report. And then on September the 16th to the 17th is when we get the FOMC meeting. So we'll get the announcement on September the 17th at 2 p.m. 8 p.m. European time. And the ECB meeting is on September the 11th coming up, and the Bank of England meeting is on September the 18th. So another bit of news yesterday, Kraft Heinz is going to split into two companies, You may remember many years ago, I can't remember, about 5 years ago or so, Kraft and Heinz joined together. Well, now they're going to split, corporate split. So a major decision there. Nothing special to say otherwise apart from that. So ladies and gentlemen, thank you very much for watching. If you've got any questions or comments, I'll be happy to reply to the comments in the next few hours. And I'm signing off. Like, subscribe, and comment. Thank you very much, and bye for now. Goodbye, everybody.